You're listening to the Reinvest Podcast, where each Tuesday we show business owners and entrepreneurs how to diversify into real estate by equipping you with the tools and tactics to build generational wealth. Your hosts, Garrett Gatton and Seth Ciminillo.
Hey guys, welcome to another great day on the Reinvest Podcast. Get my co-host back here.
I'm back. We had a baby 2 weeks ago, and that was a lot of fun. And
we were hoping for a girl.
We were hoping for a girl, kind of. I always felt like it was going to be a boy, but now I got boy number 4. So we got 4 strong boys, raising them to be men.
Tell them the name.
We got Caius Aurelius Samuel Ciminillo. You would think that's my 4 boys, but that was one boy with 4 names. So Caius Aurelius Samuel Ciminillo is the newest addition. It's been fun. The other boys all love having them around and want to touch them too much all the time, but that's what makes it fun.
Amanda, I don't even know what having 4 boys means for her, but probably a lot of prayer.
It means there's so much testosterone in the house, she can barely take it, but she's a trooper.
That's awesome. Good to have you back, man. Congratulations on another successful addition to the family. Got an exciting guest with us here today from Birmingham, Alabama, Miss Lindsay Davis. How are you?
Good. Thank you so much for having me on. And congratulations on 4 boys, and I will keep your wife in my prayers.
Thank you.
So Seth and I are flip-flopped.
4
He's
boys,
got
that's
4 boys. I've got 5 girls and 2 boys.
Oh my goodness.
So like we have an estrogen imbalance in our household. So
but if you keep going, you might get more boys. Who knows?
It's a volume game. Yeah. It's always kind of a dicey game to play, but
I'm in the minority. I've got 2 boys and a girl. So I'm
okay.
It's a pretty good blend in ratio. So Lindsay,
Yes.
you're in Alabama, and we're here to talk about real estate investing and Spartan Invest. You are the CEO, founder of that company. You guys have done a lot in a very short amount of time. I'm excited to talk about what you guys are doing in the Southeast here with some real estate. Give us an overview of your company today. And then why don't you take us back and tell us how you got into real estate and if you regret it.
Who is Lindsay Davis?
Well, unfortunately, that's pretty boring. Just who I am. I think what Spartan Invest has done, it's really been exciting. And like I said before, I can't believe we're actually managing 2,200 properties right now across the Southeast.
Mostly single families, by the way.
Wow.
Yeah, it's less than 20 duplexes. Yes. Yeah, it's absolutely asinine. But like you said, yes, if you couldn't tell from my accent, we are based out of Birmingham, Alabama. And the way Spartan works now is we built a goal of being able to create wealth and cash flow and higher returns for investors that could not do it on their own. So what we do now is we'll go out and purchase properties in all of our different markets. We're in Georgia, Tennessee, and Alabama. We're all over Alabama because that's where we started. We'll see that property through our entire renovation process. And then once that property's completed and it's rented, then we put that property to our investor clients. Once they purchase it, we have an in-house property management company, Atlas Rental Property, that will continue to manage the property for the life of the investment. So our investors really get a one-stop shop when they're purchasing and building their portfolio. We also, in 2020, which was a terrible year to start a new construction company, but we added a new construction branch to our family of companies where we have been doing BTR, some neighborhoods. We just completed our first BTR neighborhood in Tuscaloosa, sold all of those to investors as well.
How many units was that?
It was 70.
Wow.
Yeah, wow. It's a lot of houses.
So in Birmingham, didn't the FBI just relocate their headquarters there in the last few years?
Into Huntsville, yeah. So Huntsville, North Alabama, I mean, it has seen so much growth that's been consistently ranked on the fastest growing cities, most affordable. The average median household income is $87,000, which is which is higher than the national average. Now that's not across Alabama, right? There's a lot of engineering, aerospace.
Yeah.
That's where, NASA's relocating. So it's driven by a lot of very, very, very high paying white collar jobs. but still it's seen so much growth.
Yeah, I'm sure that's probably made you guys feel pretty good about being located in the Southeast and some markets that you're already established in.
Oh, absolutely. Absolutely. So kind of going back to how we got started, and that, I guess personally, when I was in college, and I, originally from Georgia, moved to Alabama to go to the university.
Are you a Bulldogs fan or Roll Tide?
So I grew up a Bulldogs fan because both my parents went to UGA, but then I graduated from the University of Alabama. So I'm a diehard Bama fan.
Wow, you flipped. That's got to be controversial. Yes. Don't talk about politics or college football at the family dinner table.
Yeah, it's pretty tough. In fact, the last time that Alabama beat Georgia, it was the SEC championship, and Alabama was not at all supposed to win. Georgia was supposed to dominate and then go on to the playoffs, and Alabama took their spot. My dad didn't talk to me until Christmas Day, so he went a solid month without speaking to me.
Yeah, people can get pretty into football. I'm not into football, but my in-laws are very into Ohio State Buckeyes. So, like, they do not like Bama. It's like...
It's funny about the college football scene. So my cousin shares a birthday with me. We're 2 years apart to the day. He's older than me, and he's a Bulldogs fan. And it's always SEC, Big Ten. You know what I mean?
Mm-hmm. Yeah, and, absolutely.
Unfortunately, people who are in the Big Ten, they're like trying to get people to get riled up that are SEC, but it's like it's always demoralizing when you don't even get a reaction because they don't even think that you're on the same plane as them. So you have a weird complex about the SEC and all that, which we won't get into today, but. All right, so you went to Alabama and you graduated there. Was it anything business, real estate related, or was your degree in something
No, not
different?
at all. It was in business management, and I started my career in the corporate world at Cintas. But when I was going through college, my parents helped me purchase a property, a rental home that I lived in, and then rented out the rooms. Now, this wasn't really to make money. This was that for me to establish residency, because it was cheaper to buy a property and live in that property to establish in-state residency than it was to pay out-of-state tuition. So that's really kind of where the decision came from. But also going through college, I mean, I didn't have a huge fund. I worked 2 jobs. And so renting out the 2 other rooms in this property was essentially paying my rent for the most part. I think I've still had some leftover utilities that I was responsible for. But for the most part, I mean, that's what carried my rent through the last 3 years of my college experience. And so I'd always been, from a very young age, invested in real estate. Now, jump ahead to I've been in the corporate world for about 4.5 years. The market is in terrible condition. There's some investors that are out of Montgomery who kind of pitched to me and my business partner, like, hey, do you want to try some flips? Because so many properties were going to foreclosure.
What year was this?
This was 2010.
Okay.
So we purchased a couple of properties in the Tuscaloosa area, got them for just dirt cheap, and flipped them. I mean, we did minimal stuff to it, but then really kind of saw a lot of reward. So that's kind of when it's the light bulb of, hey, this might be something. Both in our early 20s, and we just decided, hey, why not now? And we left our corporate job and started doing this full time.
Wow.
Then moved that to 2013. Again, the market is still not fully recovered. 2012 was when we finally saw some significant turnaround. But in 2011, 2012, a lot of properties, they still sat an average of 65 to 75 days on the market. And when you're starting a company and there's only 2 people and you don't sell any properties, then you don't make any money. So kind of in I guess maybe a panic, we went out and purchased a bunch of very, very cheap rental properties and started managing them. I was managing them as well as using the flips. And that's really when it just kind of hit, is that, hey, this was the value that we saw in real estate, because the cash flow that we were able to generate from those rental properties was, again, doing the same thing that real estate did for me in college. It was keeping the lights on. It was making sure that payments were met. It was making sure that I had a paycheck. So that's really when we decided to shift and focus.
Now, your business partner then, is that your business partner now?
No, well, he's still an owner, but he's kind of gone off and done land developments. So he's not in the company anymore, but still definitely an owner. But kind of one of those like can't sit still kind of humans, you know.
Yeah.
So he's but no, so that's just kind of when we decided to make that hard pivot. And it's not like we weren't successful at flipping, it just wasn't as consistent. And we just saw a lot of value in being able to deliver this type of product, that the product that we were seeing the benefit of to other investors from all over. And it was really tough at first to get people, one, interested in the state of Alabama in general. And
Really?
it's just,
That's funny
it
because
was.
now, I mean, I feel like Alabama, it's like the Sun Belt, like everybody's talking about it, but this was before it was popular.
This was before it was cool. So this was in 2013, 2014, where we would actually pay for investors to fly from California. We would buy their airline tickets. We would put them up in hotels just to show them Birmingham.
How were you identifying these investors? Like, where were you meeting these guys?
So we would just do searches of absentee owners pockets. And no, not really bigger pockets. No, we weren't really using that yet, but it was primarily just doing title searches. We were already very much familiar with that process, given our focus on buying foreclosed properties. So we always had to do a lot of title work to ensure that, the properties that we were purchasing had clear and free title. So we just used that leverage and focused on those
people that already owned in the area then?
No, not in the area, but in the South.
Oh, okay. Wow. So you guys were just like casting a wide net.
Wide net. Okay. Very
now,
wide net.
Now, this was to source your deals, or you're saying, if somebody
to source the buyers.
Yeah.
This was sourcing the buyers, right? Because we already had basic kind of the infrastructure on the boots on the ground. We had, I was already managing properties. We were already overseeing renovations on our flips and then some of our rentals. And so we already had contractors, real estate agents. We had a team here. It was the buyers. And then that's when we also brought in Maureen McCann. She was actually in the real estate space before that. And she joined us in 2014, I believe.
Wow. So were you already doing third-party property management at this point, or were you only managing for yourself still?
We were only managing for ourselves, and that's how it has been up until, I don't know, like a year or so ago. So as our property management company stands, we have only ever managed properties that Spartan Invest has purchased and resold.
Right, but
theoretically,
once
you're
you
now
sell
a
them,
third-party manager to do the buyer.
Yeah, I mean,
once we've sold them.
Yeah.
Oh, go ahead. Sorry.
Well, in Alabama, you have to have a broker's license to do third-party property management. And when did that enter into the picture for you guys, having to have your broker's license?
Right when we were starting. So we started Spartan Invest, and it was Alabama rental property at the time. And then when we left the state of Alabama, we had to do a name change to Atlas Rental Property, but it was at the same time. We had to form the brokerage and start that property management division as soon as we started selling to investors.
Okay, gotcha.
Here's what I want to kind of pivot. Thanks for giving us the genesis of that. I think it's interesting that, solving a tuition problem for college is what really kind of piqued your interest in planted a seed for real estate, now that you're obviously full tilt into 2,200 rentals, predominantly single family from 2010?
13 when we started really adding rentals. Yes.
So in 13 years, that is a lot of renovations, project, construction management. I mean, there's a lot of reps in that amount of time, acquisition, disposition.
Well, and how spread out are you now?
So, I mean, we're pretty spread out. We're in the vast majority of the state of Alabama. So we're from Montgomery all the way up. We are not anywhere near the coast in the Mobile area, but from Montgomery all the way up to state lines.
So can you explain how your property management company is
spread out?
So spread out when you're dealing with singles and duplexes, because So we have a little bit of a background. Our old broker used to have a property management company, and he had locally like 400 units that he was managing, and they were mostly singles and doubles and stuff like that, small stuff. And even with it all being relatively in the same 2 counties,
a lot of logistics.
I mean, there's a lot of roofs, right? There's a lot of plumbing fixtures. There's a lot of water heaters. There's a lot of foundations and just different things going on because it's not an apartment complex with 200 units. So explain kind of how some of those systems look for you guys, or what made you even think you could do that?
Well, it's kind of one of those that's hard to answer because we just kind of did it and figured it out. And that's a terrible answer.
Yeah.
And I think we've done a really good job of putting in specific processes, because you're absolutely right. Logistically speaking, it is an absolute nightmare, because if you're doing maintenance, you have to take into consideration that the tenant's not always going to be there, or the tenant may not want you to come in on a certain day. And then if it's an emergency, we still have to get in there. We still have to follow all of the landlord tenant laws, all of those things, and then mapping it accordingly so you can be as efficient in the route as possible. But how it kind of started is that since Spartan Invest is doing these renovations, and we're not doing small fix, like little renovations. We're replacing the roof if it's older than 5 years. We replace the HVAC if it's older than 5 years. Wow. We replace every water heater. We do granite countertops, luxury vinyl plank flooring throughout the house. So we're renovating the property with a low maintenance in mind. So we're checking all of those CapEx items. And then the contractors that we give all of that work to have to also provide a warranty. So at that point, once it goes to our property management company, if there is something that initially comes up, our investor doesn't pay for it, and we send that back to the contractor to make sure that it gets taken care of. Now, you guys are in this space and know that it doesn't matter what big renovation we do to these properties, there's always going to be maintenance. So then years down the road, how you grow that maintenance department is just really having vendors that you can trust, and it's having systems of accountability in place. And I can't stress that enough, and that you have to put a lot of trust in your vendors or employees if you grow the team. Our maintenance and move out team is our largest employee departments. We have about 87 employees currently, and majority of them live in the maintenance and move out turn areas. And how we handle it now is not how we started handling it, right? We utilized vendors and using, like I said, just accountability and building those relationships. But now it's our teams are in, I guess, geo areas. And so when we make a hire for a maintenance tech or a move out tech, wherever they live, it's kind of based on that would be their technical territory. So it cuts down on commuting. And then we have kind somebody that manages our inventory, a little bit of regional, I guess a little regional pockets for our maintenance and move out teams. That's not a great answer, because it is logistically a nightmare, but
that makes sense that you guys are doing really heavy remodels on the front end.
Yeah.
Mm-hmm.
I guess the next follow-up question, because you're doing really heavy remodels on the front end, how are these returns shaking out for investors? I mean, what kind of returns are these guys looking for? Your ideal kind of clientele. I mean, what are they looking for? Because I feel like that strategy wouldn't work everywhere.
I don't think it does, because you've got affordability, just cost of living is a lot lower in Alabama, Georgia, and Tennessee than it is anywhere else. So your barrier to entry is a great deal lower. But most of our investors are seeing anywhere from 9 to 10% returns. Now, those investors who purchased with us in 2015, 16, they've seen their rent increase sometimes 20, 30%. Their returns are a great deal larger. Now, and again, not fluffing up, this is not every single investor. We've sold properties that, hey, the tenants moved in, and 2 years later, we find out that there's the water line. We scope the sewer and we do septic inspections, but the water line needs to be replaced. And that's not something that you dig up and check when you're renovating a property. So those type of things do happen. It's not rainbows and butterflies for every investor, right? But that's the risk of purchasing real estate. But doing everything that we can to mitigate that risk as much as possible on the front end definitely helps on the management side.
Yeah, absolutely.
Do you guys negotiate like service contracts with your vendors yearly to fix cost and stuff like that?
Absolutely.
What's a minimum expectation if you're going to establish a vendor relationship with a contractor or a service company that's going to maintenance the properties? I mean, they'd have to work with you on fixing their costs for at least a year.
They would have to. I mean, well, so we basically set our cost based on a per square foot. So if it's plumbing, electrical, flooring, it doesn't matter. We already established that cost. And so we essentially give them a quote and they accept it. It's not like they go out and quote it and then give it back to us. We go out and say, based on all of our information, all of what we know, things, cost to renovate, this is what this property is going to cost for us to do it. And then we pass that off to a vendor.
What about ongoing maintenance stuff? Like, okay, you get in there and now you have a service call and it doesn't fall within the warranty that the contractor is going to pick up.
So we, Spartan Invest, and again, this is kind of a lot of things that the investor client doesn't really see, because we also offer a maintenance warranty that is post 90 days after the tenant moves in. And a lot of times, and our investors know that we do that, but if something does come up, we just pay for it. So if it does fall outside of the scope of what the contractor would or could or should have done, then we just have our maintenance team do it and Spartan Invest pays for it.
I mean, that sounds nice, but what about for properties that people have held for 5 years? I mean, at some point, there's going to be stuff that happens that you guys aren't going to pay for, and the contractor says that's beyond. So, I mean, you
guys are just sending your maintenance teams out there, and
you have in-house maintenance then in all these
we do.
places?
Yes, we have. We have in-house maintenance, and like I said, when we started, it was heavily relying on vendors, and now we've built our entire maintenance department that has 30 plus employees.
So I know we didn't officially say this title, but managing 2,000 plus rentals and what it taught us about real estate. I know we're getting into that. What else have you guys learned through this process of just rep by rep, taking another one online and renovating it and then managing it and throw it into the portfolio?
What we have learned from, I guess, on the investing side of real estate, or what we've learned from a business standpoint?
Both. Both. Give me one of each.
From a business standpoint, I would think that it's more on the operations. And I think a lot of times when people enter the real estate world as a guru, like hey, they're marketing and giving advice, and they're much more sales oriented people. And that's not me at all. I'm much more on the operations side. So we've always been a very heavily operational company. So building systems and that everything is backed by data and calculated to a T. And like I said, we use our proprietary calculator to go out to a property. So when an acquisitions agent goes to a house, based on our portfolio, he puts in a zip code and then puts in characteristics. For example, it's a 3-2, so it adds that zip code has a base amount, let's say of $500. And then we know that a 3-2 will add an additional $400 to the rent. We know if it's a fenced-in backyard, that adds an additional $50 to the rent. So all of that is already calculated. And putting those processes in place is how you're able to scale at that level, to where you can equip your team to get in and get out of evaluations quickly, to have your contractors, all of those scopes are the same. And I think it just really comes down to making sure that you're setting up the team for success. Because what I learned not doing that, right, the first time I stepped out of actually going to buy the properties. It's like, hey, look, I'm just going to train you how to do it. And you try to gut check and like, I'm pretty sure this house can rent for this. And it just, that doesn't work. Not everybody can do that. And that's not scalable.
That's an interesting business principle, is to remove yourself out of a process and see how it functions without you. And it shows you how much you've automated and systematized that, or how much of it lives in your head as the operator.
Yeah, and if it only lives in my head, then it's no use and we'll never grow.
Yeah.
Yeah.
And so putting those processes in place is essential. Sorry, I was going to say on the real estate side.
Go ahead. Go ahead.
Yeah, go ahead. No, you go.
I think doing these investment rentals for as long as we've done them at the scale in which we've done them, the biggest takeaway is that, yes, there are hiccups. Yes, not every property is going to be perfect, and not every property is going to generate a return. But overall, real estate works. It doesn't matter how rural the property might be. It doesn't matter if the property is hot pink. There is a tenant for every property at the right price. And there is the ability to cash flow if the numbers work. You know what I'm saying? Like it does work. If you take the right approach to investing in the single family space, you will always be able to find. We have yet to purchase a property that we could not rent. There's always those people that are going to need housing, and those properties are always going to be able to perform. Yes, there might be some roadblocks, but that question I feel very confidently always answering yes. So I think that's something that scale and volume teaches you.
That's good.
Yeah. So here's where my mind goes as we're talking through this. It sounds like the business model, you guys identify good deals or good rentals, you remodel them, you sell them to investors that are probably out of state or just want a turnkey solution. They buy them, you manage them. Obviously, your property management company, you make money when you sell it to them, and then you probably make money on the fees. But do you guys still own real estate yourself? Does Spartan Invest still own real estate, and you guys have your own rentals too, and you're continuing to build your portfolio? Because I was like, that's great that you're a property management company, but what about actually getting the full benefit of investing in real estate and partaking of the appreciation of everything?
No, absolutely.
So you guys still buy and hold rentals yourself? Okay.
We do. We have our own, and we own about 45, it could be 50 now, rental properties in our own portfolio. And then, of course, me and my husband have a rental portfolio of 26 properties.
Okay.
So, yeah, cool. I think I talk a lot about real estate because that's what I do. I'm much more of a passive real estate investor. I could not list off all of the addresses to my own portfolio at all. I'm definitely more on the operation side with Spartan, but
you've built the engine to manage your own properties, which is nice. Yeah. So that's a benefit.
Yes, I couldn't tell you who or where my properties all are, which is that's the goal, right? That's the dream.
Well, we're gonna jump into our smaller pockets segment. So, Lindsay, go ahead and tell us about a deal that has gone wrong. So, first of all, what happened in the deal or the remodel or whatever it is? And then, more importantly, what did you learn from it?
I have to be honest, guys. There's so many. There's just a lot. And man, and I know we talked about this before we even started, and I've been racking my brain on trying to find the best possible one to share. Probably, I think the most entertaining one, because we've definitely gone down the rabbit hole of we paid a contractor to start work on this job, and he took the money and left, and we have lived that life, right? Like I don't even know how many times, again, because we have to be in a volume game because we don't make money on every single property. But one property that I will probably never, ever forget, we did our renovation to it. We had it under contract to sell to an investor. We already had a tenant, and that tenant was getting ready to move in. Well, the day after the tenant moved in, so everything was happening kind of simultaneously. The tenant was moving in. We were getting ready to close. The state police and a couple of FBI agents show up to the house and said that they had gotten a report from the contractors that did the work that they had put a dead body in the basement, in the walls. And when they were doing the renovation, cemented up the walls.
What?
Yes.
Wait. So the contractors who did the work.
It was a contract. It was the contractors that did the work. It was their significant other, girlfriend, somebody had reported that had happened.
Wow.
A family member or of
Just
the contractor
out of spite?
We have no idea. So these tenants move in, and then all of a sudden we have all of these people raid the property. The girlfriend or significant other, I can't remember what she was, but she goes and like tells them like, yes, there's a body in this wall. And so then we have to, so of course, like we're all running out there. We're there. Like I get called to the property. We're all watching them cut into our basement wall. There's nothing there. There's nothing there.
LiDAR or something first, just to like check to see if there's something behind the wall.
You would think. I mean, it was like
one of those little heat cameras, the home inspector.
Yeah, or something.
You would 100% think, but it was that one was.
Way. It's that easy, huh?
So they cut into the wall because you said it was concrete.
It was concrete. It was a concrete basement wall.
So then what?
And they said it was a faux wall, like they said, like it was built in, and that there was somebody in between.
So then what came of that? So they cut into the wall. Obviously, there's no body.
Right.
And then what'd you guys have to do?
Then it's just kind of one of those things where like, all right, everybody stand back, and we're blowing, and so we're just kind of standing there and we're like, what is going on? We can't even really, we hear, and then we get pushed out. We can't even be in there. It's like, I'm the property owner. And then they don't find anything. And then it is just as quick as like, all right, well, okay, thanks for your time. And they just leave a hole in the wall. And you're just like,
they didn't pay for it?
No, we had to pay for it. We had to pay to get it. Yes.
There's no way that is legal.
Well, it's kind of like, hey, are we going to go after them, or what kind of repercussions?
They're like, hey, we did our best. Thanks for letting us come over and
it was like, hey,
destroy.
Thanks
for
your time. I was like,
You know what's tough is if you're the tenant later that night after all that craziness, you're like, what if they looked at the wrong wall?
Oh no, the tenant moved out. Yeah, no, the tenant vacated. They were.
So did the investor that was going to buy it end up closing on it?
So that we pushed the closing back because we had to fix the wall and get a new tenant. So it definitely delayed the closing. I would probably say the lesson with that is, man,
being tactful with that investor to keep them on the hook.
Curveballs are definitely part of the game. That's for sure.
So you bring up an interesting point through this.
Sometimes dead bodies are hidden in houses.
We're not.
That was enough of a tip that they were like, oh, we've seen this happen before. We need to make sure this isn't going on again.
Well, I just would be curious at the story that she told to make them believe and then go and vandalize. You know what I'm saying? It's like it had to have been extremely detailed. It's my imagination, but we didn't get told any of that.
And they broke up. Whoever
a little bit,
she
probably
was dating or married to, they definitely
we didn't use the contractor again. So
they didn't make it.
No, they didn't make the cut.
Mama drama. So what happened? You guys were like on the hook for floating the cost of the acquisition and the remodel, and obviously you were able to delay it, and the investor still purchased it. But how do you guys secure financing? Do you do most of it through lines of credit, through other investors that come in on the back end?
We have some capital investors, but primarily from lines of credit.
And so your average project is from acquisition to the time that someone closes on it, like the end buyer is what, 120 days?
Let's see. Yeah, right at about from total time to purchase to sold, we're I think like right at 5.5 months. And so from the time that, we're purchasing renovation, then that's just on our reno side. Our new construction side can vary, obviously, based on land development.
So this is where I'm really going to hitch between the eyes because I'm starting to put pieces together. You've done 2,200 of these projects in a very short amount of time, and you're carrying the cost on a line of credit for 5.5 months for one project. how much in a line of credit do you have access to? Because that's a lot of simultaneous projects that are going on to be able to float all of that for 5.5 months before you get paid back.
So we have a line of credit, and then also we're able to borrow off of the equity once purchased, based on the amount of time that we hold the asset.
Gotcha.
So like we use the line of credit, and then whatever that property is worth, we're able to borrow 75% of that property's value. So that helps increase, but it's based on, but if we hold on to properties for too long, after I think it's like 400 days or something like that, it'll drop down to 50%. And those happen, right? Like things go completely wrong with some properties that we've purchased, and we just have to hold on to them for a really long time just for unforeseen circumstances. But those are definitely the exception. So we're able to borrow against that, and we have access to almost 20 million.
Mm-hmm. So you've had to build some pretty strong lending relationships. Are you using like one lender mainly for all this stuff, or do you
we have a couple of lenders,
partners?
But one primarily for the largest line. Yes.
Yeah. Makes
fascinating.
Because you got to be able to be pretty quick on your financing. Because I mean, you're obviously still competing with a lot of investors in those areas, a lot of
absolutely
so did
local
you guys,
buyers. And so, what's the average price point of that? Like, if you had to give like us an average price point, where are we at with these houses? Because I'm thinking of it in our area, it's probably a lot different. So where are you guys at?
For our renovated homes, our average sale price last year was $164,000.
Okay, so it's really, it's not that crazy different, but
you meeting the 1% rule on those?
No, we're like 0.8. On average. They are slightly inflated because we do a forward commitment for our investors. We do kind of about split that. So we bake in about half the cost of that onto the sales price. So our investors can lock in a 5.5% interest rate. We have to buy that in bulk up front. And so we've been doing that for a couple of years now. So I would probably say that without purchasing the forward commitment, our average sale price would be probably around the 156 range.
Got it.
Okay.
Got it. All right. We are going to go into what we call our little nugget. So Lindsay, as part of our show, you've given us a lot of great advice, but we want to drill down to you personally. What is like Lindsay's rule? What's your
ethos?
Yeah, that drives you, that you would say this has really shaped who I am today, and that would be a piece of advice for another investor listening to this.
I'm not sure that this is what has shaped me, but it is definitely what has shaped the company. And man, it's really boring though. I was going to say just having all of the facts, and that's a kind of not a great way to say it. I'm struggling here.
What do you mean by that? I think you're hitting on something good here, but expound upon that.
Yeah. So every Friday we meet in all of the teams together, and we have to write on the board all of our KPIs. So we're extremely metric driven, from occupancy, maintenance ratio. And so when I say facts, it's ensuring that we don't make decisions without having all of the information, all of the data that will drive what markets we go into, what properties we buy. And it drives kind of the company, and it's helped with the growth of the company, but it's also helped me personally as a leader in deciphering intercompany conflict, and like, hey, let's look at the information. So if you're saying that this these work orders are taking too long to get completed, okay, well, what's the average work order completion time? What properties are having, just nailing down the actual information to assess whether something's a problem or not, I think it's something that I have to live in the world a lot, and I utilize. It's not very charismatic, but it's just true.
Do you guys use like EOS or anything like that, traction, like an entrepreneurial operating system to like run your business or anything like that? You guys just have your own systems that you've just kind of created over time? And
Yes.
So if I can, I'm going to put words in your mouth, and then you just tell me if you don't want them in there. Is you draw your confidence as a leader from the data and the facts, and it allows you to be able to address things with employees operationally in the company, and then educated decisions moving forward.
Yeah, absolutely. I think that you said that perfectly. And also in conversations with investors, a lot of times something will happen with a particular property and an investor will get really upset and want to talk to me. And they're like, I'm not making any money on this house. So, okay, well, let's look at the report card. So every investor has a report card that has every year's performance and their overall income, and it has the breakdown of all of that. So then I can take that to the investor and it's like, yeah, you had a rough year. I get it. And I'm very sorry. But again, this is a long-term investment. Look, last year you had exceptional cash flow. The year before that, you had exceptional cash flow. You had a tenant that stayed in your property for 3 years. And yeah, they left it in really poor condition, but your property performed as it should for 3 years. You're going to have a bad year, right? Like in the stock market, everyone has dips and bad years and everything like that. But you're going to continue to see that growth and appreciation.
And how much coaching do you do with people, even on like the tax benefits of owning real estate and the depreciation? I mean, do you get into that when you're selling these investments in single family houses to people? It's like, hey, not only are you getting the cash flow, but there's some of these ancillary benefits. Do you guys try to reflect that for your investors on those report cards or anything?
Absolutely. Absolutely. We include all of that in there. And then our wealth advisors, real estate advisors, they talk a lot about just kind of all of the different ways that real estate will pay you. They walk through, we have like webinar workshops where we showcase, hey, this, yes, the cash flow is nice, but look at all of these other factors. You've got inflation profiting, depreciation, appreciation, all of the different ways that you can make money from purchasing real estate.
Yeah. Lindsay, this has been really great. For anybody who knows anything about real estate, it's obviously been very impressive to see what you guys have scaled to. Obviously not by accident, if they're listening to this episode. What does it look like as we kind of wrap this up for people to follow your guys' success, to connect with you, maybe to look at some of the investments you guys are bringing online?
You can obviously go to our website, SpartanInvest.com. We also have a podcast. It's On the House with Spartan Invest. Now, that podcast is primarily to just really dive into a lot of how we assess a house, how we're going to target purchasing, how we do our renovation. So if you really want to just, figure out what our eviction process looks like, it's a very educational tool on how we do absolutely everything in each department. And then we also have other guests on there that speak about other, facets of real estate investing. And you can check out on our website. We have all of our available inventory, and set up a call with one of our sales representatives, and they can walk you through everything, all the questions. There's way too much content on our website.
Well, we will put those links in our show notes here, and so that people can connect with you guys further. Thank you so much for coming on the podcast today, and excited to see you guys. I don't know, what's the next goal? Is there a number of? You're at 2,200 now. Is it 3,000?
What's the? Yeah.
Well, I'd love to get to 10,000, but that would definitely be the BHAG, the big, hairy, audacious goal. I think the next goal for us, though, would be to enter into another market.
Okay.
Very cool.
Awesome.
All right. Well, blessings, Lindsay. Thank you.
Thank you guys so much. Appreciate it.
As always, excited that you joined us for another episode of the Reinvest Podcast. If you want to learn how you can use your hard-earned capital to diversify into real estate, go to our website, reinvestcapital.us, and shoot us a message. Move farther, reach higher, and grow deeper.